Hi all, and welcome to HSBC India's keynote address at Your Stories TechSparks, a forum that dwells into the understanding of what next as the world in general recovers, rebuilds, and reimagines the future. At HSBC, we've always been focused on being future ready, and it's this focus of us that has helped us open up a world of opportunities for our customers. With that said, I'd like to invite Rajat Verma, MD and Head Commercial Banking at HSBC India, to talk us through his views about what next for commercial banking and banking as general. Welcome, Rajat.
Thank you, Aditi.
Rajat, to start off, we know that HSBC India's commercial banking has grown from strength to strength. And in fact, even despite the recent challenges, has witnessed a robust asset portfolio growth. Now, this journey would have definitely involved moving from a traditional banking model to adapting to a new age. Can you kind of walk us through this evolution and what it entailed?
Sure, Aditi. It's a question that can be answered at many levels. Well, truth be told, a lot of our growth is conventional as well, but a lot of new tailwinds that we see are in areas that perhaps we couldn't have done without the use of technology. And as your question is focused around the use of technology, let me try to focus my answer on that as well. So technology for us does a few things. It reduces the friction of our transactions, and therefore reduces the operating cost and increases the efficiency. And I think that is a point that everybody would understand quite well. The biggest examples of that might be coming across, not necessarily in 2022, but maybe a little beyond that, is the use of blockchain or distributed ledger financing or distributed ledger transactions in international trade, where obviously wherever you have more friction, there the use of technology can make the most impact. So the other element that we are using technology for is to improve the quality of our information and our assessment. So there's a really important part of banking, which is the human element. There's equally an important part of credit assessment, which is around data. And as data develops, the quality of that information improves for us. The ability for us to assess, overlay our own judgment with the information that has now been made available to us is the second, probably most important thing that we've been trying to do. It's a bit of a journey, and I think it'll continue. But certainly, I would say that has helped in our credit assessment and our compliance assessments as well. I think the third thing that finance does, that technology does for finance, is really allow areas to be banked which were not, which were probably very difficult to bank earlier, and thereby reduce the costs, thereby improve access to financial products to people who perhaps earlier could not get them. And we serve certain segments of this perhaps indirectly through microfinance and through non-bank finance companies as well. But that's the other very interesting role of technology, and we've tried to adapt to that by embedding solutions, collection solutions, payment solutions with many industries who serve what I would call the underserved, and that's been quite important for us as well.
Great, Rajat. And from what I even recall, there've been a lot of digi solutions provided for other aspects of banking, right? Like your account opening, signing. Could you just talk us through some of those as well?
Sure. So I spoke in the previous answer, Aditi, I spoke about reducing the cost of transactions or reducing what I call friction, right?
Yeah.
Signing a piece of paper, then going physically, etc. Obviously, it's frictional. And the pandemic taught us that you needn't always do it in this manner. There are good ways to be as secure virtually as they were physically, as long as you use technology smartly and you put all the bells and whistles and controls around it. Yeah. So one of the solutions that we've got into our product portfolio is that we just felt that a lot of the physical signing was not required. And a very significant proportion of our clients now are signing every document that is coming into the bank digitally. Of course, I must also say that regulations and laws have to keep up with that, and they have, and that they are enablers, because without the law of the land allowing this and allowing these documents in courts, etc., this doesn't move forward. And the changes that have happened in the ecosystem in India, in the financial services ecosystem, but generally, more generally, in the around the digital laws as well, has helped immensely. So this has been a fantastic sort of reduction of friction point, I would say. There's several other areas I could talk about. For example, one of the great emerging sectors of our economy is around new age B2C, well, let's say e-commerce, not necessarily just e-commerce, but anything which goes from one to many consumers and uses technology. And they have methods, they have needs to collect money in different forms, to collect it quickly, to be able to reconcile it quickly, because these are very small transactions. And we've worked on solutions around that space as well, which have been really well received by our clients. It's called OmniCollect. The other area that we've tried to work very specifically is around, India is a regulated economy. So therefore, whenever you make an international payment, you have various procedures to complete and compliances to do with your authorized dealer, which is the bank. So one solution which we call Unitransact essentially tries to merge the FX journey with the documentation journey, and gives our clients the ability to see where they are. If there's any problem in their compliance, then they can address it online. And just again, going back to this point around friction, the amount of friction that this causes, I think at one point, many international transactions, there's almost a 25-30% drop rate. And suddenly that drop rate with technology and with a do-it-yourself kind of a portal can come down into the single digits. So it's a simple idea, but it's quite powerful.
Really
so these are
interesting,
some of the
Rajat.
ideas.
Yeah. Thanks for sharing that, Rajat. Now, traditionally, one would assume that fintechs and banks are competitors. But from what we've discussed right now, it's pretty clear that there's more of a collaboration model working between banks and fintechs. I just wanted to know your views on competitors versus collaborators, banks and fintechs.
Sure. I think this answer may change with the passage of time, in the sense that the relationship between the fintechs and the banks, as I can see it right now, is one where the banks have the customers and fintechs have the products, or the ability to develop solutions perhaps faster than banks, or perhaps to work with banks to create platforms such that the banks can reach out more efficiently to their customers. So I see this as a very clear case of partnership today. I don't really see this as a competitive environment. Definitely, it's the way that I see it is that banks have the trust of the clients, and fintechs are the ones who will be able to sort of goad and push the banks to show them what can be done with technology. So it's a partnership for now, for sure. I think in certain areas where the architecture kind of opens up completely at some point, it's quite possible that some of the fintechs become banks, some of the technology companies become banks, etc. But but the number of such companies who will be able to transition, in my opinion, is quite few, because ultimately people will trust you with money for a few reasons, and the biggest reason is trust. And whichever institution that if you and I were to leave our money there, we got to be very comfortable that we have that institution has our trust. Beyond that, technology wouldn't work, trust would, and therefore, or laws would. So banks have insurance premiums around them, and deposits are secured up to a certain amount, etc., etc. But also they have their own reputation and regulators behind them. So until that infrastructure changes to something different, I think the element of trust means that only some very trusted fintechs probably can transition on to broader financial services players.
Interesting, Rajat. And my two key takeouts were trust and reaching a larger base of consumers, right? And that obviously can be done and there's a lot of talk about it through app-based banking, right? Banks having their own apps to service their customers. And what are your views on this model?
I think you've seen that wherever the apps of the institutions, whether they're financial institutions or whether they are tech companies as financial institutions, developing as financial institutions, I think you've seen that the apps have become broader, more and more encompassing, starting from financial service, just payments, to, I don't know, they've gone to paying your bills. That's the basic level. Then they've gone to giving you reward points. Then they've gone further, and some of them have become portals for your travel and entertainment and everything else. You know, the kind of master apps or mother apps. So clearly, that's convenience, because isn't that what has happened on phones as well, right? We use our phones, and nobody has an alarm clock now, and nobody has very few people have watches, and so on. There's so many calculators and etc. 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 I could go on. There must be 50, 60 devices on our phone. So yes, there is value in a master app, and in an app being quite efficient. And it also helps in the other way, which is that clients can get information on their own. They don't need to call a call center. It's the most irritating thing we've all faced in a bank is, you know, you wait 8 minutes for an operator to come on, and then say that I can't help you with this. But you know, you don't need all of that if you've got an app and a system which through AI or through machine learning can give you good answers, probably better than humans can for repetitive activities. So in the retail, so to answer the question, Aditi, I think in the consumer space, the role of an app is really, really important. We are all used to it, and therefore there is no other way to go for a financial institution but to have a very good app. In the wholesale space, I would say certainly in the mid to large corporate space, I think a lot of the friction has been taken out through other means in any case. Banking has been based on the internet, and you have ERP systems which have been connected host to host with financial institutions. Often you have the complexity of multiple jurisdictions for larger companies, etc., which perhaps just can't be sorted with simple solutions connected with the local architecture of the bank. So for now, I would say that the frictional costs in the wholesale space are, as a percentage of the effort involved, are actually lower already. So you'll see development. Of course, you'll see development in that space. I think blockchain is the biggest, or distributed ledger is a big development in the wholesale space, and you'll see other developments as well. But I think there, the concept of apps and their use is here and now for the consumer space, less so for the wholesale space.
Understood. And Rajat, we've covered fintechs, we've covered apps, but digital banking or tech and banking is a huge topic, right? And we can go on and on about it. Unfortunately, we've run out of time, Rajat, but would really request and like you to leave parting thoughts for our audiences on this theme of digital banking.
Sure, thanks, Aditi. I think in summary, I would say that I see the role of technology on many levels, but most importantly at 3 levels. The first and the most obvious one is that it reduces the cost of acquisition, the cost of friction, the cost of transaction, the frictional pain involved in financial services quite dramatically. And in that aspect, its movement forward is definitely unstoppable and very practical, and it'll keep happening. We've given examples of e-signing, we've given examples of just KYC and all of those other things which happen now automatically through APIs rather than people coming physically and checking things, which is now probably going to be a thing of the past. The other area which I think technology is doing, has started to do, and is probably more at its infancy than the frictional element that I spoke about, is the use of data for decisioning. Now that does exist. It's quite relatively easier when you're doing very small ticket loans on a cash flow basis, perhaps. But it's still, I would say, at its infancy. It's still a very small percentage of the financial services industry. And I would caution people that there is no magic wand here. People have to understand that there has to be a human element. I mean, take the case of non-bank finance companies where people on the ground assess the person and in addition to any data that they might have. So I think just a technology solution is probably not good enough. But clearly technology has a real role to play in aiding decision. I think the third and probably the most important role that technology can play in a country like India, more than other parts of the world, is that it can leapfrog and get financial inclusion to a level which is not possible without technology. You cannot touch the underserved banking population in India, the underserved credit requirements of this country. You cannot get rid of the money lenders and the chit funds, etc. They serve a purpose currently, but you cannot do that without the use of technology. And the architecture and the APIs that India has evolved around Aadhaar and other things. And OCEN, for instance, is promising technology. Don't know how they will be implemented, that time will tell. But I think the third and probably for me the most important thing for a country like India is the use of technology to try to build a more level playing field for credit, which might finally start to see the light of day.
Interesting, Rajat. Thanks for your time, and over to you, your story.